Almost every parent with a child support case can benefit from knowing how payments affect your tax return and vice versa. It seems simple enough. Child support paid is not tax deductible, and payments received don't count as taxable income. The ATO treats child support essentially as a cash transfer between parents that happens outside the tax system, but paying parents are required to report payments made on their tax return. We can also think about what happens when parents don't lodge tax returns and what you should do when your income changes. I've got some important advice to share on that at the end. I'm Dr. Andrew Lancaster, Director of the non-government enterprise Child Support Australia. Thousands of Australian parents have asked for and received advice from me on child support matters since 2017. Let's explore how parents with a child support case should handle their tax returns. Taxable income reported in your tax return is a key factor in calculating child support. If you're a paying parent, the higher your taxable income, the more you'll pay. The income of the receiving parent also affects payments, but generally has a smaller impact. Let's cover what to do when you complete your annual tax return. If you pay child support, your tax return will ask if you've made any payments. You should answer this question accurately, but I don't believe this question is important for your finances. These payments aren't tax deductible. Enter the total amount of child support you paid in the financial year. If you receive child support, it's even simpler. You don't need to report these payments because they're not considered taxable income. Lodging by the 31st of October is recommended. The exact timing usually has no significant financial implications. Services Australia will backdate any income changes. There is a misconception that not lodging your tax return is a way to dodge child support. I was disappointed to see Women's Legal Services Australia stating this on ABC News.
There's a range of tactics that are used primarily by men in the child support system to either underpay or delay payment of child support payments. The tactics are things like working part-time, reducing the business turnover.
So what happens when someone doesn't lodge a tax return? How is a child support in that case calculated?
Well, in that case, then child support isn't paid at all. This is a form of family violence. It is economic abuse, and it needs to be named up and nationally recognised as such to ensure that women and children have the protection that we all expect them to have in the tax system.
What actually happens is that Services Australia will keep using the payer's last recorded income to calculate payments. Monthly payments do not stop, and when the payer eventually lodges or Services Australia makes an income determination, backdating will be done to claw back any payment shortfalls. If you're expecting a tax refund and have overdue payments, the refund can be intercepted to cover your child support debt. This happens automatically, even if you have a repayment plan. Contact Services Australia before lodging if this will cause hardship. Child support payments can also affect Family Tax Benefit Part A. If you receive child support, Services Australia reduces your FTB by 50 cents for every dollar over the maintenance income free area. This threshold is around $2,000 per year in most cases. What should you do when your taxable income changes? For a pay increase, the best course of action is normally to do nothing. The pay rise will eventually work its way through to the child support assessment when you lodge your tax return. If you tell Services Australia that your pay has gone up, they will bring forward this change immediately rather than starting it at the beginning of the next financial year. In other words, you will be penalised financially for informing Services Australia of a pay rise. You don't have to tell them under normal circumstances. Don't do it unless you want to pay more or receive less. Just submit your tax return in due course as you normally would. For a pay drop, the story is completely different. Inform Services Australia straight away. As a rule of thumb, it is your fault if your pay goes down and you don't tell CSA. They won't backdate. Submit an income estimate as soon as possible to get financial relief. There is a loophole in the child support system with respect to pay drops. If your income is high one year and low the next, you can effectively have the high pay year ignored. Just report your reduced income soon after 1st July by submitting an estimate. CSA will start using this figure for current payments, not the higher level from the previous financial year. A pay drop of at least 15% is required when reporting reduced income. For more guidance on financial matters and parenting after separation, visit Child Support Australia.